Hello, and thank you for joining me today. We continue our discussion on tax saving tips, and today we want to look at taxation of dividend. As a business owner or as an individual, it's very important for you to know about how dividend received is taxed, which will help you in terms of how to plan to save on tax. So, when we say dividend, what do we mean by dividend? Dividend is a distribution of profits by a company to its shareholders. Understanding how your dividend is taxed helps with tax planning, especially if you are a shareholder in a closed company. We am going to go through a few examples and a few points. But before I do that, I want to share my screen with you as always. So just bear with me as I share my screen with you. So as discussed, today our topic is on taxation of dividend, and I've already given you an introductory of what dividend is. So let's move on to the next point. Okay, I give an introduction that a closed company is usually a company which is privately owned and controlled and done by 5 or fewer individual participants. The majority of small companies in many family companies are closed companies. So if you are a business owner and you are a shareholder and you are the main shareholder, maybe you have a share in the company with your spouse, mostly you fall under a closed company. Understanding the taxation of dividends will actually help you in terms of saving tax because most of the time I get queries from clients and when they make profit, how do you take funds out of your company in a tax efficient manner? So that's why it's important that you listen to this discussion, and I'm confident it will help you when you go to your accountant. If you need help, you can always come to us as well. So let's move on with what we have on the screen. When you say dividend, if you are a UK citizen, so if an individual is resident and domiciled in the UK, he will be chargeable to UK tax on dividends received from non-UK resident companies. Let's move on with what we have on the screen. So the next point that we want to look at is how are dividend taxed? You can earn some dividend income each year without paying tax. You do not pay tax on any dividend income that falls within your personal allowance. And as I've discussed in earlier videos, personal allowance is the amount of income you earn each year without paying tax. For tax year 2020-21, the personal allowance is 12,500. So if let's say all your income, including your dividend, is adding up to 12,500, then definitely you will not pay any tax on your dividend. Let's move on to what we have on the screen. Another thing that I want to introduce to you is dividend allowance. You also get dividend allowance each year. You only pay tax on any dividend income above the dividend allowance. You do not pay tax on dividends from shares in ISA. ISA is individual savings account. But let's say let's look at what we have on the screen and we can go into a bit detail in dividend allowance. Okay. So what I wanted to say is that the dividend allowance for tax year 2020-21, that is the period from 6th of April 2020 to 5th of April 2021. The dividend allowance is 2,000. So let's say if your income for the tax year your other income is 12,500, and then you have a dividend from your company of 2,000, so you get 14,500. This amount will not incur any tax because you will be within the dividend allowance of 2,000. Let's move on to another point on the screen. I want us to look at how we work out tax on dividends. So how much you pay on dividend above the dividend allowance depends on your income tax band. I'm going to put the income tax band on the screen so that we can go through together before we move on to a bit further on the dividend allowance. So bear with me as I share the income tax band. As you can see on the screen, if in a tax year your income is up to 12,500, that is covering the personal allowance, then your tax is normally will be zero. So if you are within, your income is within the 12,500, and let's say you have a dividend of 2,000, then the tax that you pay is 0%. You don't pay any tax. However, if your income is, you'll be within the basic rate if your income is from £12,501 to 50,000. So in that case, you are within a 20% tax rate band. And because you are within the 20%, if you add income, add dividend income above the £2,000 dividend allowance, then any excess will be taxed at 20%. We'll go through an example. So just let me just go through the discussion, go through an example. Yeah. If you're in higher rate tax band, that is your income is above 50,000 up to 150,000, then any excess above the dividend allowance of 2,000, you pay a tax of 40% on the excess. And then if you are an additional rate taxpayer, that is your income is about £150,000, then your any excess of dividend income above the £2,000 dividend allowance rate will be taxed at 45%. Okay, so I'm going to go back to the video and then we'll move on to the next point. So tax rate on dividend over allowances. Okay, I think I want to correct something. If you are within the basic rate tax band, let me share the screen with you. Yes. Okay, if you are within the basic rate, let's say your income is from £0 to £50,000, and you have a dividend above the £2,000 dividend allowance, then any excess above the £2,000 dividend allowance will be taxed at 7.5%. Yeah, initially I said 20%, but it's actually 7.5%. That is, you pay 7.5% on your excess dividend above your dividend allowance. If you're a higher rate taxpayer, then any excess dividend income above the 2,000 dividend allowance, you pay a tax of 32.5% on that. And if you're an additional rate taxpayer, any excess dividend above the dividend allowance, you pay a tax rate of 38.1%. Yeah. So as you can see on the screen, these are the rate, and it's very important you know this, especially if you are an owner of a small company, because when you make profit in your company, you need to, when you come to us, for instance, we do some kind of a planning for you, and we help you in terms of how you can withdraw money from your company in the tax efficient way. We do analysis using your income, the profit you've made, and then the income you've earned as a company director. And then based on that, you'll be able to pick, the scenario which will give you maximum net pay, where you can save on tax. So it's important that you know these tax rates. Let's move on to the next point. I'll go back to the video now. Okay. So we've gone through the tax rate on dividend over allowances. Yes, we've gone through that. Now we're going to apply it to one. So let's look at the example on the screen. Okay. In the example, we have, let's say you had a dividend income of 4,000 in 2021, and your salary is 28,500 in wages in the tax year 2020-21. This gives you a total income of 32,500. You have a personal allowance of 12,500. So what we'll do is you take this off your total income and to leave a taxable income of 20,000 pounds. And this is the basic rate tax band. So you will pay, the basic rate tax band, we said your tax rate will normally be 20% for the other income. But however, the dividend, the tax rate would normally have been 7.5%. But in this case, you have the basic, the 16,000 pounds. Whereas when you take off the 12,500 from the 20,500, you get 60,000 pounds. That will be taxed at 20%. And the excess of the dividend, because you had a dividend at 4,000, so the excess would be 2,000, and that 2,000 will be taxed at 7.5%. Yeah. So that's what I wanted to discuss with you. And now we want to look at how you pay your dividend. Okay. So how you pay your tax? Yeah, how you pay your tax on dividend. If you need to pay tax on dividend, it will depend on the amount of dividend income you got in a tax year. So let's say in the tax year 2020-21, your dividend was up to 10,000 pounds. Here, assuming you are just an employer, and you're not a company director, you're an employer, but you have shares in companies and you had a dividend of up to 10,000 pounds. The way you can pay the dividend will be, you can call HMRC helpline directly, and then they will give you an assessment form to fill and pay, or you can ask HMRC to change your tax code. Yes, so that you can pay the tax through your tax code, or you can file a self-assessment tax return, and we can help you to sort it out. Yeah, file a self-assessment tax return, and then through that you can pay your dividend tax. The other level that I want to discuss is if your dividend income in the tax year, let's say tax year 2020-21, is over 10,000 pounds, then definitely you need to file a self-assessment tax return, and we can assist you to file a self-assessment tax return. Yeah, let's go back to the screen. Let's see what we have. Yeah. Thank you very much. I hope this has been useful to you. So as a recap, we discussed taxation of dividend, and we said normally the dividend you pay, the percentage of the dividend you pay will depend on your income tax band. And we've gone through the income tax band where we said, if I put it back on the screen, the income tax band will normally be, it's either you are a basic rate taxpayer, a higher rate taxpayer, or additional rate taxpayer. And if you are a basic rate taxpayer, normally you will pay, your dividend tax will be 7.5%. That is, you only pay dividend on the excess of dividend income over the dividend allowance of 2,000. If you're a higher rate taxpayer, it's 2.5%. And if you're an additional rate taxpayer, you pay a dividend tax of 38.1. Thank you very much for making a time to join us. I'm going to stop sharing my screen now. So thank you very much. Stay safe, and then see you tomorrow. Thank you.